Is Wendy's the next GameStop? If you opened your trading app yesterday, you probably thought there was a mistake. Wendy's, yes, the burger company, was suddenly one of the hottest stocks in America. Not Nvidia, not Tesla, not Apple, Wendy's. In just a single trading session, the stock exploded more than 40%. Trading volume went through the roof, WallStreetBets was everywhere, retail investors piled in, and for a brief moment, it felt like 2021 all over again. The internet started asking one question: is Wendy's the next GameStop? Hi there, I'm Deervolt and welcome to Capital Insider. Today, we're breaking down one of the strangest market stories of the year. Because this isn't really a story about burgers or French fries or even Wendy's. It's a story about hype, about FOMO, about retail investors, and about why WallStreetBets still has the power to shake the stock market. So, how did a fast food chain suddenly become one of the hottest stocks on Wall Street? Let's find out. So, why Wendy's? Here's the weird part. Absolutely nothing extraordinary happened at Wendy's. They didn't launch a revolutionary new menu, they didn't announce record-breaking earnings, they didn't discover the cure for cancer, and despite what social media might have suggested, they definitely didn't invent the world's greatest burger overnight. So why was everyone suddenly buying the stock? Well, because sometimes the market stops caring about business and starts caring about the story. Before the rally, Wendy's had quietly become one of Wall Street's forgotten companies. The stock had spent years drifting lower. Growth had slowed, competition in the fast food industry was fierce as ever, and after disappointing investors for years, most people had simply stopped paying attention. Ironically, that's what made it attractive, because meme stocks usually don't start with companies everyone loves. They start with companies everyone has written off. Think about GameStop, AMC, Bed Bath & Beyond. None of them were Wall Street's favorite stock. They were struggling businesses with recognizable brands, large communities, and one very important ingredient: people were betting against them. Which brings us to Wendy's. By the time the rally started, a significant portion of the company's shares had been sold short. That meant that there were plenty of traders who believed that the stock would continue falling. And if you've spent any time on WallStreetBets, you already know what happens next. The internet sees high short interest and start asking a very dangerous question. What happens if everyone buys at once? That's the same question that sparked one of the biggest retail trading events in history back in 2021. And suddenly, people weren't looking at Wendy's as a fast food company anymore. They were looking at it as a potential meme stock. A chance to catch lightning in a bottle for the second time. Whether that comparison was justified is a completely different story. Now let's talk about the Reddit effect. This is where the story gets interesting, because Wendy's didn't suddenly become a better company overnight. The internet simply decided to pay more attention. Like so many modern market stories, it started online. A post began gaining traction on WallStreetBets. The argument wasn't particularly complicated. Wendy's was a recognizable brand. The stock had been beaten down for years. Short interest was relatively high, and if enough retail investors bought shares at the same time, short sellers could find themselves in trouble. Now, whether that actually happens or not almost doesn't matter, because markets don't just react to the facts, they react to beliefs. And once enough people believe something might happen, they start acting on it. Most people bought the stock, the price started climbing, financial creators began posting about it, news outlets picked up the story, and more traders noticed the chart, which attracted even more buyers. And just like that, the rally became self-fulfilling. The stock was rising because people were buying. And people were buying because the stock was rising. If that sounds irrational, that's because it is. But that's also exactly how momentum works. Markets have always been driven by emotion. The only difference today, that emotion spreads across the internet in seconds instead of days. One viral Reddit post, a few screenshots on X, some TikTok videos, a couple of YouTubers talking about it, and suddenly, millions of people are looking at the exact same stock. Not because anything fundamental changed, but because everyone else is looking at it too. And that's when one word started appearing everywhere: GameStop. So, is this really the next GameStop? At this point, the comparison was everywhere. This is the next GameStop. The squeeze has started. Don't miss it. But let's slow down for a second, because while Wendy's and GameStop share a few similarities, they're also very different stories. GameStop wasn't just a stock that went viral, it became one of the most extraordinary events in stock market history. billions of dollars changed hands, massive hedge funds were caught on the wrong side of the trade, trading platforms restricted buying, politicians got involved, even people who have never invested before suddenly knew what a short squeeze was. It wasn't just a rally, it became a global event. That's an incredibly high bar. Now look at Wendy's. Yes, the stock had relatively high short interest. Yes, retail investors suddenly piled in. Yes, WallStreetBets helped fuel the momentum. But that's where most of the similarities end. GameStop wasn't driven by one ingredient. It was driven by the perfect storm. An unusually large short position, aggressive options buying, millions of coordinated retail traders, a unique moment in market history. Trying to recreate that exact formula is a bit like trying to recreate a lightning strike. Just because the clouds look similar doesn't mean you're getting another storm. And that's something investors often forget. Every time a beaten down stock starts moving, someone immediately calls the next GameStop. We've heard it with AMC, we've heard it with Bed Bath & Beyond, we've heard it with dozens of other so-called meme stocks. Most of them had one thing in common. The excitement faded long before the business changed. But eventually, every meme stock reaches the same moment. The charts stop telling the story and the fundamentals start asking questions. And that's exactly what happened. After the excitement came the questions. The same questions investors had been asking about Wendy's for years. Had the company suddenly become dramatically more profitable? No. Had revenue doubled overnight? No. Had Wendy's discovered some revolutionary new business model? Not even close. Hey guys, Studio Devolt here for a second to tell you about today's sponsor, Weekly. Now if you're anything like me, your life is probably scattered across about 17 different places right now. You've got tasks in your notes app, ideas in your WhatsApp messages you send to yourself at 2 in the morning, random screenshots you'll definitely forget to look at again, 27 browser tabs you swear are important, and somehow a sticky note on your desk that's been there since March. You know that feeling when you know you wrote something down, you just can't remember where. That's exactly why I started using Weekly. Instead of trying another massive productivity system, Weekly is just one place to keep your life together. Your tasks, your notes, your reminders, your budgeting, even your AI assistant. Everything lives in one place, so you're not constantly trying to remember where you saved something. And unlike other apps like Notion, opening Weekly doesn't feel like you've accidentally started a second job. It's simple, it's clean, and it actually helps you feel more organized instead of less. If you'd like to check it out for yourself, head over to myweekly.co.za and use the code CAPITALINSIDER for 15% off. Subscriptions start at just $5 per month, which is about 20% of what you'd be paying for another app. Thanks again to Weekly for supporting the channel. Now let's get back to the video. The truth is, very little had actually changed. The burgers were still the same. The restaurants were still the same. The company still facing the same challenges it had been facing the week before. The only thing that had really changed was the price of the stock. And that's an important distinction, because a stock price can move much faster than the business behind it. Sometimes that's justified. Sometimes a company reports incredible earnings, launches a game-changing product, or announces news that genuinely changes its future. But sometimes the price moves because people believe someone else will pay more tomorrow. That is momentum. And momentum is incredibly powerful. Until it isn't. Because eventually, someone takes profit. Then someone else does the same. The buying pressure begins to slow, the headlines become less exciting, the screenshots disappear from social media, and suddenly, the momentum that pushed the stock higher starts pulling it lower. Within days, Wendy's had already given back a large portion of its gains. Not because WallStreetBets disappeared, not because the company suddenly became terrible again, but because markets eventually ask a question that hype can't answer. What is this business actually worth? And that's where every meme stock faces its biggest challenge. Not creating excitement, keeping it alive. So, is Wendy's the next GameStop? Probably not. But I think that's the wrong question. The better question is, why do meme stocks keep coming back? After everything that happened in 2021, you'd think investors have learned their lesson. The GameStop saga became one of the biggest financial stories in history. Billions of dollars changed hands, fortunes were made, fortunes were lost, and eventually, most of the stocks came crashing back down to reality. So, why are we still seeing the same thing happen years later? Well, because human psychology hasn't changed. People are still searching for the next stock that could double overnight. They're still chasing the next viral trade, the next screenshot, the next success story, and social media has made that easier than ever. A single Reddit post can reach millions of people in a matter of hours. A single chart can spread across X, TikTok, YouTube, Discord before Wall Street has even finished its morning coffee. Suddenly, thousands of investors are looking at the exact same opportunity. Not because they spent weeks researching the company, but because everyone else is talking about it. That's the power of a narrative. And narratives are incredibly difficult to fight, because once enough people believe a story, the story starts becoming reality. At least for a little while, money flows in, the price goes up, and the headlines become more dramatic, which attracts even more buyers, until eventually reality catches up. Because businesses aren't valued by memes forever. They're valued by earnings, by cash flow, by execution, and by whether the company can actually deliver on the expectations that investors have created. And that's why meme stocks are so fascinating. They remind us that the stock market isn't just driven by numbers. It's driven by people, by emotion, by hope, by fear, by greed, and sometimes by nothing more than a viral post on the internet. That's exactly what happened with Wendy's. The burgers didn't change, the business barely changed, the story did. And for a few days, that was enough. So, is Wendy's the next GameStop? No. And honestly, it was never trying to be. GameStop wasn't just a stock that went viral. It was a once-in-a-generation event. The perfect combination of retail investors, massive short interest, options activity, social media momentum, and timing. Those moments don't come around very often. But that doesn't mean Wendy's wasn't an important story. Because what happened this week proved something. Retail investors still have influence. WallStreetBets can still move markets. A compelling story can still attract millions of dollars almost overnight. And for a few days, that's exactly what happened. But here's the lesson I hope every investor takes away from this. A stock can move because of hype. It can move because of momentum. It can even move because of memes. But eventually, every single company has to answer the same question. Can the business justify the price? That's the question Wendy's now faces. And that's the same question SpaceX investors are asking. It's the same question Virgin Galactic investors are asking. And it's the same question every great company eventually has to answer. Because in the short term, the market votes. But in the long term, the business decides. So, did you buy any Wendy's stock? Let us know in the comments below. And while you're there, hit the like button and subscribe so you don't miss any future news about the stock market. Thanks for watching this video. I'll see you in the next one. And as always, happy investing.